here's your host, Rod Khleif.
Welcome to another edition of Lifetime Cash Flow through Real Estate Investing. I'm Rod Khleif, and I am thrilled that you're here. And I'm really looking forward to this interview today with Tim Little. Now, Tim is the founder and CEO of Zana Investments, which is named after his daughters. And he's a combat veteran with over 25 years in uniform. So definitely thank you for your service, brother. And he's in the Army Reserve still as a commander of a public affairs battalion. And he's in over 900 doors as a general partner. And excited to get into this with him. Welcome, brother.
Yeah, thanks for having me, Rod.
Absolutely. So why don't you give us a little background on your journey, and you've been in the military a long time. Why real estate? What prompted that thought process, and kind of bring us current, if you would.
Sure. So, like you said, was in the military straight out of college. I actually did it right out of high school too. A month after I graduated high school, I was at basic training. Did that for a couple of years. Decided it wasn't for me. I did my time in the National Guard because I still owed a commitment. But an ROTC recruiter got to me in college and was like, "Hey, how would you like a guaranteed job? And I think you could add a little something since you've been enlisted too." So convinced me to go back in through their ROTC program. So I was in from 2003 to 2008. Did a couple of tours, in Iraq while I was there. And when I got out, I was committed to going back to grad school, right? I wanted to get educated again. I felt like I had been out of the classroom for a while. And at first I was focused on more the international side of things, but then I started to get into business. And this is, right after, the financial crisis. And even by like 2010, the job market wasn't looking great.
Right.
And so they actually had a dual degree program where I was able to get, international affairs and
you got an MBA in international.
And an MBA at the same time.
Wow.
So it was kind of a twofer, right, for a 3-year program.
Nice.
And I figured that would make me a lot more marketable. So got out and, got my job with a government contractor in Washington, D.C., and was doing the whole, in my early 30s thing, having fun. But I also realized that I needed to start making more money than just my W-2 income.
I see.
And so I had read Rich Dad, Poor Dad a while back, but I needed to revisit it and remind myself, some of those key lessons, assets versus liabilities, etc. And real estate as one of those prime means to do that. Where I think I differed from a lot of people is that I did not want to do the one house at a time thing. I was convinced that I wanted to do multifamily, even if it was small multifamily, right? So I was like, okay, I'm going to buy a duplex. And I was set on buying a duplex. Looked around Washington, D.C., prohibitively expensive, couldn't find anything in my backyard. So then I went to Richmond, Virginia, hung out there for a weekend, toured probably 6 different duplexes, and wound up putting an offer in on one for $85,000, if you can believe that.
Urban.
Yeah. Yeah. In a up and coming, rougher, neighborhood.
So gentrifying neighborhood.
Sure.
Okay.
Didn't know how long it was going to take to gentrify, but it was affordable to me. And so I was able to get that, like I said, for what I felt like was a lot of money down at the time. You're putting $25,000 down, when you're a young guy. That was a lot of money, but it met my criteria. And I did have criteria, which at the time was $100 a month per door, profit at the end of the day, cash flow. That I think what we fail to recognize sometimes is, even when you keep it that tight, like it only takes one thing going wrong for a year's worth of profit.
Let's elaborate on that.
To go out the window.
Before we move past that, because a lot of people don't realize that. I get in arguments over people that want to buy single-family houses, or even a plex like this.
Yeah.
$100K per month per unit, okay? If you have somebody move out of one of the units, you're going to spend a few $1,000s typically to get it back in shape, and you're going to lose a couple months' rent. There's 2 years worth of profit on your asset, okay? So this is why the smaller deals literally don't cash flow. Now listen, It took me 2,000 houses to get that memo, so don't feel bad, brother. Okay, so don't feel bad, but no, you're much smarter to go into multifamily. Please continue.
Yeah, and so like you said, 3 months. I think it was about 2 to 3 months within getting that property. One of the tenants just stopped paying, right? And before I could even take legal action, they just up in the middle of the night moved out. And to your point, it cost me between $2,000 and $3,000 just to get their stuff moved out. Just to get it cleaned out to the point where I could get it rent ready to get a new tenant in there. And so that was one of my first, seminars, as you call them, when I was getting my first rental property. Fast forward a little bit, I started doing the math that people, tell you to do when you start looking at bigger pockets and stuff like that. They're like, okay, so if I'm going to make this much per month and I need this many units, and I was like, I can't buy 50 duplexes. Like it's just not realistic. So that's when I started looking abroad and seeing what else was out there as an option. And that's when I discovered commercial multifamily through listening to podcasts like yours and reading books. And then eventually I wound up going to my first, multifamily convention, right? And so I went to this one in Texas and basically just got fire hosed with information. Most of the concepts I didn't understand, but I was learning a lot. Didn't like the pitch at the end, but I was like, this is something that I think makes sense, but I want to try it myself. So I said, you know what? And I was about to go on another deployment. This is circa 2017. I knew I wouldn't be able to take advantage of coaching anyways because I'd be deployed, right? So instead of putting that money into coaching at that time, I was like, let me invest this little capital that I do have and put it towards being a passive investor. I wasn't super confident yet, but I felt like I knew enough to ask some smart and stupid questions. And found, a sponsor that I trusted, a property that I thought made sense with the rudimentary underwriting that I was able to do at the time, and put $25,000 in as a passive investor. And then shipped off to Kuwait, right? And I think it was, 90 days later after that first quarter or whatever, I wound up getting my first distribution check, and it was small, right? Like $300, $400, whatever it was, but it was a proof of concept for me. And that was really what I call, earning while I learn. Because I was able to ask all the questions that I wanted to. I was able to much better understand the passive investor's perspective, which played into once I became a general partner later. And I was able to do well from an investment perspective. So that was my first time being a limited partner on a deal. Again, this is fast forward from that first property that I bought about 3 years.
Got it. And you also mentioned you went to one of my boot camps in Tampa. And you live in Tampa now.
I do.
And your first, correct me if I'm, well, talk about that. Talk about that experience. How'd you like the boot camp, number one, and tell me what came about from that boot camp.
Sure. So like I said, I got into that first passive investment in 2017, was gone for a year, so couldn't do much other than learn. Right. And then 2018, I dove, even deeper into the syndication side of things. 2019, saw you were going to be in town, and I was like, wow, it's right in my backyard. Like, why would I not go when I can drive there? And that. And everyone is different, right, in how they teach this stuff. What I got from you, a lot more mindset stuff, but also, some of the fundamentals, but also just met a bunch of great people there. And
that's the biggest benefit of the event.
Oh, yeah, the networking.
Right.
It was huge. And coming out of it, like everyone was hyped up, right? Like everybody's like, yeah, I'm going to do my first deal. And so some of these folks that I kept in contact with, they called me up because, over that deployment, I'd saved up a little bit of capital, right? Couldn't spend the money while I was over there. So they're like, hey, Tim, we got this deal. It's in Tampa, 59 unit portfolio. Do you want to invest? And I was like, thanks, but no thanks. Because I wanted to find my own deal, right? I don't want to be a passive investor. And so they were like, okay. And then a couple months go by. Again, I'm still staying in contact with these guys. They called me up again and they said, hey, Tim, we're running up against the clock here. Do you still have that capital available? I was like, yes. They're like, okay, if you're willing to do some of the work that's involved with this deal, we're willing to bring you in as a GP as long as you bring your capital with you. And I was like, okay. And so I was able to kind of sneak my way into that deal. But then, as you know, I was also willing to put the work in. I was boots on the ground, so that made things a lot easier. And, you know, you talk about, like, what kind of stuff can you do? Well, there was a lot of stuff that I could do. I could go and take photos of the property because, again, I'm so close to it. I was working with the city to combine lots that we had on there because this was a portfolio deal. So some were as small as duplexes, and the largest building, I think, was 23 units. So it was messy, right? And we were trying to make it less messy for resale by combining some of those plots. So again, really going in there and saying, hey, where do you need me? What can I do to help? I was able to get into that deal, and that worked out great. Again, just based on the timing, you know, buying it in 2019 in Tampa, and then just seeing how Tampa has blown up since then. We did very well on that deal, and I've obviously done a lot more since. And some of those folks that I partnered with on that deal, I've partnered with on every deal since because they became, you know, part of
people you met
core group.
at the boot camp. Yeah, that's fantastic. And yeah, I mean, they leave hyped up from my boot camp because I spend, you know, 80 to 90% of this is mindset. So many people will go to something like that, they never do anything with it.
Yeah.
And so, you know, I spend time on that, and you know, that's awesome. So, you know, a couple things I wanted to mention. You know, I love the fact that you're going, you know, you're raising capital from senior military. I got the pleasure of speaking at ADPI. You know who they are, Active Duty Passive Income.
Yep.
Speaking at their event in San Antonio in front of a few hundred active duty people, which was a real treat about a month ago. And so talking about raising capital, and so you're in 900 doors now, a lot in Tampa or all over?
No more in Tampa. Ever since
it?
we sold that first deal, it just got a little pricey.
Yeah.
In Tampa,
Rents went up 30%. I mean, good God, in 1 year.
Right.
Yeah.
So things got a little frothy here.
Right.
So we looked elsewhere, like a lot of sponsors. Right. Texas. We do have a property in Tallahassee.
Oh, nice.
And a lot in Atlanta. So
Atlanta. Okay. All right. Good. Same for me. Yeah, those are markets that we like as well. So you met these team members at my boot camp, and they're now you're in a solid team together doing these deals together. Would that be an accurate statement, or are you doing one-off deals together? Because some partnerships come together and you do everything together. Some do, you know, deal by deal. Is it more of a deal by deal relationship or every deal?
So yes and no. One of them I've done every deal since.
Gotcha.
Has been with him, and we've been a little unique in the sense that we've like maintained our personal branding, right? Like I have Zana Investments,
Right.
and you know my buddy has whatever.
Right.
But what we do is we come together as a GP team in order to co-GP with others because there's a lot of leverage. You know, if I'm Tim and I'm coming and I can say, hey Rod, I can raise like 300,000 for this deal. You're like, that's great, but not very helpful.
Right.
But if I come with my group of partners that I always work with and we form an entity called whatever, then I say, hey, this group that I work with, we can come and we can raise $1 to $2 million. Well, now I might get my foot in the door to be a co-GP on that deal with you. Now, does that split up the pie more? Yes. But if I'm at a level where I'm not able to raise that much yet,
yeah,
then
I want to throw a big red caution flag out here, okay? And that is, we talked about this a little before we started recording, in that you cannot just raise money.
Absolutely.
And so the challenges with what you just described are, if let's say you put 3 or 4 people together, create an entity and go raise money for a deal, all 3 or 4 of those people need to be actively involved in that deal. And so it becomes a challenge, depending on how many co-GPs you've got in a deal, to have a realistic amount of work for each individual person. And it can be challenging. You got to be real careful with it, because I can tell you, especially with what's happening right now, I'm hearing almost every day about world-class operators that are in trouble, people that are losing properties to foreclosure. I mean, people I have a lot of respect for, and the SEC is going to start shining their spotlight on people, and they're going to make examples of some people. It's inevitable that it's coming, and so I just want to caution you, those of you listening, that as you raise money, you've got to be actively involved in the deal, and it's got to make sense. It's got to be it's got to make sense. If you're raising $1 million, you better do a significant amount of work on the deal. For example, if you raise 100, 200, that's less, but you've got to be doing something besides raising the money. And we talked about this. I just want to hammer it home because it is. I hate to say it, but the SEC is complaint driven, and we're going to see a lot of complaints coming through on these deals going south. And so, now's the time to be careful. But I don't want to scare you. Now is the time to get freaking excited. Like right now, I've got a deal that was under contract for $26 million. We're getting for $20, and it's a screaming deal, a mile away from another asset that we have. So if you heard that and you're an accredited investor, text the word partner to 72345, and we'll tell you about it. But the deals are coming. I haven't bought a deal in a year, and I'm starting. Have you starting to see things open up as well?
We're still seeing quite a delta between what we're underwriting it at and what
we may have just fallen into this one, but we're starting to see some things open up, and and I'm hearing about massive reserve increases in some of these guys that have bridge debt where they're having to pay a monthly reserve that's much, much higher than they anticipated. Like one guy from $8,000 to $80,000 a month, just to get ready for their inevitable debt coming due. And now we're seeing some fire sale stuff on our end. So I'm getting excited. I'm really excited about this deal we've got and what's coming. So back to team for a minute, because you've done a really good job putting a team together. Talk about what you look for in other team members, because you're a solid guy and you're in the military, so you know all about team. And give me some examples of maybe some of the things you looked for before you decided to work with some of these people.
Yeah, and it's really tough because some people look really good on paper, but until you work with them, and see like what kind of person they really are,
their work ethic and how they handle problems and so on and so forth. Yes,
right. And even when we talked about co-GPing, how they run their properties versus how they say they're going to run their property in their business plan, because you have a certain amount of vulnerability if you're co-GPing with someone, right? Because you're partnering, and anytime you partner, there's risk.
It's a reflection on you as well.
Exactly, and so we've had good partnerships and we've had bad partnerships. The bad ones are where the values aren't aligned, right? Where you go in and you say, hey, but this was the business plan. We were going to put this money into this. And they're like, yeah, but we want to cut back and we want to, reserve as much cash as possible. And we don't need to do that in order to get the rent bump. You know what I mean? Not doing what you say you were going to do, which I think is just fundamental. Like, do what you say you were going to do. Yeah. Because then you slowly start to diverge on, what you think is important, because tenants are important, right? And it's not just a money thing. Like, people need to be proud of the place that they live at. Otherwise, they're not going to stay. If you want to bring it right down to the money, it's a lot cheaper to keep a tenant. Oh yeah. Than it is
biggest expense you have is tenant turnover. Beyond that's the largest expense that you control, that you have. And no, that's very solid. And so it starts with core values, really, and integrity. And would you say work ethic is another one? I mentioned that previously.
Right, because you find some people kind of trail off. Right. Maybe they talk big at the beginning, then all of a sudden they're not showing up to meetings. You can't find them. Right. I expect people to show up when they're expected to be there on time. Like again, fundamentals.
How about communication? That's another one. The lack thereof. Where they're not responding to your emails or your texts or whatever. You find that as well.
Yes, and part of that transparency is one of our key values. Like, especially again when you're co-GPing, right? Like you want information to flow directly from them down to you so that you can communicate with your investors. And to your point earlier about some folks who are just raising money and then kind of sitting back for the rest of the time, they put themselves in a very precarious position because they may not even know what's going on if they're not going to those asset management meetings, if they're not, meeting with property management or reading all the updates that are coming out.
Right.
They can't talk to their investors. They have no say.
And what's bad about that is it puts the whole deal in jeopardy, okay?
Right.
Because if they have a problem, everybody has a problem, and that's the way this works. And again, I'm not trying to scare you. I just want to, my job actually is to scare you, but, there are resources available that can help you select the best team members. I've got one that's fantastic, which is a book called Questions to Ask When Forming a Partnership. And if you go to rodslinks.com, it's one of the free books there, because you get excited, you get emotional about a deal, and you forget to ask all the hard questions. How are we going to divide the profits? What happens if we don't live up to our responsibilities? How will we dissolve this thing? How are we going to handle a big disagreement, and so on and so forth. So you need to ask these hard questions up front before you get into bed with somebody, because a partnership's like a marriage, easy to get into and very hard to get out of, right? So you've got to do that. And I would also say, I don't know if you agree with this, trust your gut.
Sure, definitely. And I think, like you said, especially in the beginning, you're very eager to get into deals.
Right.
And that's when your judgment can lapse, because the eagerness kind of overrides your gut and some of the red flags that might be waving in front of you. So kind of you need to consciously dial it back a little bit and say, okay, have I asked these questions?
Mm-hmm.
Have I looked at their performance in the past? Have I talked to some of the people that they've partnered with and said, hey, how was this guy or girl? Because this is a relatively small community.
It is.
So they will tell you, right? Like they will say, hey, awesome guy or girl, would totally work with them again, or I would never work with them again. And those are the kind of things you want to know.
Or you might hear, I would be careful, and that would mean don't work with them.
Right. They're trying to be polite.
Right. So be careful with that. No, but this is a very small world we work in. I mean, people think there's, tens of thousands. It's a small world, and everybody knows everybody, and everybody knows what's going on. Everybody knows who's hurting and having challenges and so on and so forth. And that's coming out more and more now. So you've got to operate with integrity as well. I mean, there's just no question. That's got to be your number one core value. It's ours, and I'm sure it's yours as well, based on your military background.
Absolutely.
Right? Yeah. And so we talked about team. I don't want to talk about that first deal, because that's kind of a one-off when you do a portfolio like that. Talk about your first deal that was just one property. If you recall, and how big it was and where it was, and just let's dig into one of your deals.
Yeah, so that'd probably be the Tallahassee property.
Okay. How many doors?
136.
Okay, good sized deal. Okay.
Right, and this one was a little unique because it was, Tallahassee, Florida State, obviously. You would assume right off the bat that it was a student. It was a student, but they were transitioning it to market.
Gotcha.
And so the intent was, hey, it was a couple years old. We're going to wait till all the students move out and then start to renovate the whole thing, because it needed a facelift and needed to be modernized. And the challenge with that is you're going from zero occupancy.
Right.
And that is, I didn't appreciate at the time how challenging and how risky that could be.
Very dangerous.
I'm just like, just lease it up. Like how hard could that be? But the challenge becomes like, anything that can go wrong will go wrong, right? Like there's always going to be something that doesn't go according to plan. It's just the natural way of things. And so for us, it was, say like a delay in repiping, right? All it takes is, the city took a month instead of a week to come out.
You had to replumb the whole thing?
We did, because of the type of pipes.
Oh, wow. Had some bad polyurethane type stuff in there. Now, was it built as student housing where there were lots of big common area, more bedrooms than normal, or was it an unusual layout? Or?
It wasn't.
Oh, okay. Good.
It had the poly pipes.
Yeah,
and
polybutyl. So I can't never.
Right, polybutylene.
Right,
or whatever.
I think that's it. Right. So you had to repipe the whole thing. Wow, what a pain.
Right. It wasn't something we planned for, but again, once you get equity partners, then they make certain demands. And their logic was, when we go to sell, it'll be much more attractive to institutional buyers. because it'll be updated and they won't have to worry about that as a risk or put the money into it themselves. You could argue yes, no.
Yeah.
And so, boom, you already have an overage in terms of budget, right? Okay.
CapEx.
But then you have your timeline gets thrown a little bit. And then again, you're working with the city who you have absolutely no control over when it comes to when they come to inspect. So all of a sudden, the original timeline gets pushed. Now, all of a sudden, we were getting completed, like say the first building was getting completed in November versus peak leasing season. And that just throws everything off. The dominoes start to fall, right? And so it takes that much longer to lease up. And just these challenges kind of compound. Now, we're at like 90% right now.
Nice.
But the time that it took us to get there was much more than expected, which, causes cash flow issues.
I'll bet your rents are higher than you projected, though.
Yes.
Yeah. Because Florida. I mean, you can't freaking keep people away right now. Okay.
And so, just some challenges there. But overall, I wouldn't say I regret the project or anything.
No. Okay.
And we still have it. But just it was
a lot of stress.
It was a lot of stress. And, at the times, right, bridge debt.
You got bridge debt on it. Yeah, you had to. Yeah.
Yeah. And luckily, we were required to get a rate cap, which was unusual at that time.
Oh, thank God.
But we got a rate cap it was like $100,000 at the time.
Wow.
And then, fast forward 1 year, people are paying like.
When are you refinancing the thing?
So that's coming up, right?
Okay.
So like so many others, you have those options. Are you going to do rate cap extension? You're going to refinance.
You have to decide because the rates are so stupid right now. Are you going to go with long-term conforming debt? If you're at 90%, if you stay that way for 90 days, you can get Freddie or Fannie, right?
Right.
Okay.
Exactly.
So you got to make that. But here, just to show you guys, the dilemma right now is rates are supposed to go down. And so if your timing is you need to refinance right now, that's not the greatest thing because rates are supposed to. I mean, the Democrats don't lower the rates. It's going to be a shit show in November, which we won't go. I'm sorry I even brought that up. Never mind. But I anticipate that the current administration is going to lower rents to position themselves better. They do that every time there's an election if this comes up. And so you've got to decide: do you do another bridge loan with a rate cap? Or do you do long-term conforming debt when you've got prepayment penalties and you're locked into that debt? So that is kind of a quandary.
Or do you just sell?
Or do you sell? Or do you sell if you can?
And we're looking to see which one makes the most sense.
Yeah.
But certainly preparing for those eventualities because you certainly have to set money aside. Like you said, you have to get that 3 months of stabilized, which is 90% occupied.
Right, 90 for 90.
Right. Because otherwise you're not going to be able to
just you have to be physically occupied at 90% for 90 days to be able to get Freddie Mac or Fannie Mae debt, so you've got that. If you're going to do another bridge loan to anticipate rents dropping, then you've got to come up with a rate cap, which is stupid money right now.
Right.
So that's something you have to, and you've got to raise that money and start planning for that. So. Yeah, it's a crazy time we're in right now with interest rates the way they are and the market the way it is. And you mentioned something else. You mentioned that you had you're starting to bring units online in November. It couldn't be a worse time, obviously. And we're there right. We're in December right now. Terrible leasing time. And so when you have an asset, one of the things you do, and we do that is this at our assets, is we try to have most of them staggered out over the prime leasing time, their expirations. Okay, so that if people do move. It's the best time. So if you've got stuff, when you take over an asset, if you see a lot of leases that are expiring in November, December, you want to redo those at 13, 14, 15, 16-month leases so that you position yourself to have those come due at the best, optimal leasing time. So that's just a strategy. So the lesson in that one was, you didn't know what you were going to run into. You had to deal with that plumbing. Was that the biggest delay issue, or did you have other CapEx issues on that deal as well?
That was the biggest one.
Yeah, it's a big one. Yeah.
Yeah, I mean, and again, I think maybe there was like another inspection that took longer than expected and stuff like that. But it just goes to show, like, each one of these deals you do, you're going to run into something different. And I just try to tell myself that it'll make me better equipped to deal with future issues.
No question. Even that first duplex you got, I promise you learned a lot from that
Absolutely.
experience too. So don't get frustrated by this. They are seminars, and that's okay. But I have a lot of listeners that want to do this business. They haven't taken action yet. They know, they hear me tell them, if there was ever a freaking time, it's right now to get going on this, because I really believe opportunity's coming. And so, what would you say to those people that haven't made a move?
I mean, it sounds cliche to say there's no time like the present.
Yeah.
But the only thing you're going to regret is not doing it sooner.
Yeah.
Not starting sooner.
Yeah.
Right? Because this business, it's not a get rich quick business.
Right.
What people need to understand is it's about planting those seeds. And so even with syndication, if you're doing this as a general partner, you're getting, a small chunk at the beginning with that acquisition fee, but your biggest chunk is going to be at the end after you've added all that value to that property. But there may be a 5 or even a 7-year gap in between. So you have to keep that in mind and start getting one property, then get another one. Keep filling that pipeline. And it's kind of that delayed gratification for sure, but like any investment. But 7 years down the road, you're going to see these deals, start to come to fruition when you exit, and it's boom, boom, assuming that everything has gone well, right? Yeah. But the longer you wait, the longer you're going to delay that, that big chunk on the other side.
Yeah.
So,
or even the upfront chunk, because when you do these deals, you make money up front, you get an acquisition fee, and very often it's not insignificant. Yep. But let me ask you a question. When you think about the word successful, what does that mean to you?
Yeah, and so, I mean, success for me, it's multifaceted. There's obviously the financial aspect, right? Mm-hmm. I view this more as a retirement plan. I want to be comfortable in retirement. I don't want to be like, oh, how little can I, do on retirement? And I want to be able to do whatever I want on retirement. Part of that is my military retirement. I will get a military pension, but that'll be enough for, beer money, whatever. Mm-hmm. But the other part is setting an example for my daughters. Mm-hmm. And that's why I named it after them, Zara and Lana, Zana Investments. Mm-hmm. I want them to see that entrepreneurial example that, I didn't really see. My dad, bless his heart, he tried to do a lot of things, just didn't find necessarily success in those things. But that's why, I took my daughters out to like the triplex that I owned in St. Pete, nice. Have them, change outlets or something, while I was working on it. I talk to them about what I'm doing when they see me on TikTok or, on YouTube and ask me if I'm famous. And I say, no, but this is what I do. And this is how I try to help people, really just show them that the possibility is there. They don't just have to go to a 9-to-5 job. If they find a job they love, that's great. But I want them to know that there are other possibilities out there, and there are different ways to make money and to do what they want to do.
How did you manage the work-life balance with your girls and your bride and your military career and doing this on the side? How did you maintain any balance?
Right. It wasn't always a balance, right? Because for a lot of that time I was on active duty orders. I hopped on orders again. So, that was like my 9-to-5. And then I was still going to like asset management meetings for the properties that I was a GP on. And for that triplex in St. Pete, that's what I got after I sold my duplex. I did a 1031 exchange into a triplex in St. Pete and decided that I was going to self-manage and save myself that 10%, which is another regret that I have, because that 10% wasn't worth it in terms of the amount of time that it took away from me. Because when you're the guy they're calling when the toilet's clogged or they have bees in their bedroom, real story, then your time disappears quite quickly. I've since sold that property and put it into syndications. But it was, I tried, I guess, to savor as much time on the weekends as I could with my kids. and my wife, but I don't know if it was necessarily always a good balance at the time.
Well, that's honest. That's honest. So you're good at raising money, and you've gotten quite a bit of hands-on experience by the duplex and the triplex, and these other experiences you've had. What are you not great at?
Ooh, what am I not great at? Well, I still think that I need to get better at the raising money piece, because I've never been good at, showcasing myself, the personal brand aspect. Because if people don't know who you are and what you do, they can't know, like, and trust you, right? And so I'm not that guy who necessarily just goes up and starts talking to strangers at a party, not extroverted in that way.
I see.
I have no problem talking to people generally, but I don't go out of my way to, hey, this is what
You're
I
not
do.
a social butterfly.
Right.
Me
Yeah.
either,
I'm not the butterfly. So that idea of having to tell every person you meet what it is you do, and I get it. It's so that I'm not selfish and I can help them find the opportunities, but it's still hard to get over that mentally if you're not used to doing it.
Got it. By the way, guys, if you go to rodslinks.com, I do a raising capital workshop that I teach to my students. It's about 4 hours. It's very comprehensive. It is at the bottom of Rod's Links, right? Yeah. I'm doing another one here in a couple of weeks. So I don't know if it'll be the old one or the new one here, but I do a raising capital workshop. And if you're driving, text the word links to 72345, and it's at the bottom. And it'll give you really good understanding on raising capital, different mechanisms you use to create reach, and just how you go about it. What are you proudest of?
I think going back to, like you said, what would you tell someone who hasn't started yet?
Yeah.
I think I'm proudest that I just started, because that gets the momentum going.
Yeah.
And there was a time when I was, reading all the books, listening to all the podcasts, and
Caught in analysis paralysis.
right. And just like, and that's when I was just like, screw it. I have to do something. Yeah. And that's when I just bought the duplex, right? Was that a huge deal? No, but it was a first step, and it led to the next one, which was, passively investing. Then it led to syndication as a general partner, and all these things kind of compounded, but it may have never happened at all if I never took that first step. And I know so many people who get stuck there. Yeah. And so, I think it's fair for me to be proud of myself for taking that step.
Damn straight. Well, listen, I really appreciate you coming down here, brother, and it's great to meet you. I told him I recognize you, and it's because he was at my boot camp. I remember faces. I don't remember names. But, Tim, wonderful that you were here, and it's great to meet you, and I'm sure that I'm going to see amazing things in the future for you and your company.
All right. Thanks for having me, Rod. It's been great.
So one other quick thing. We encounter so many people that are, frankly, frustrated. They're looking in the mirror and they're frustrated that they haven't been able to escape the rat race. They haven't been able to build cash flow to the point where they're able to have financial and time freedom with their families. And maybe they see other people buying real estate and creating, incredible cash flow, and they think, well, it's just scary. Buying apartments is intimidating. And I get it. See, that's why we created our Warrior Mentorship Program. They're our coaching students, and they've had extraordinary results. My students, I've been teaching about 5 years, and they own upwards of 140,000 units now that we know of, right? And we feel like it's just getting going. Now, we're looking to grow this group and really take it to the next level. And honestly believe that the greatest transfer of wealth could be upon us right now with this current economic environment. Everything's going on sale. So we're looking for people who want to follow a proven framework, really like a blueprint or a map, literally step by step. And then they're able to leverage our systems and our incredible network to raise money and equity, to find deals and close those deals and build partnerships, really nationwide. So if you're interested in finding out more about how you can become more in our incredible network and take advantage of the unbelievable opportunities that are upon us, you can apply to my Warrior Mentorship Program by texting the word CRUSH to 72345, or you can go to mentorwithrod.com. And what we'll do is we'll set up a call so you can check us out and we can check you out and see if it's a fit. Now, again, you can go to mentorwithrod.com or text the word CRUSH to 72345 to apply, and we will speak soon.